Hello, I'm Mike Hetman, and welcome to another edition of CMS Forex News. Today is Friday, November 16th, 2007. The pound started the week pressured as last Friday saw a heavy sell-off of the pound as a result of stock woes in UK's banking sector. This market reaction extended into this week as a quarterly inflation report signaled rate cuts starting in early 2008. After bouncing back a little today, the sterling was down 350 pips to the dollar for the week, and more than 600 pips off its 26-year high set on Friday. The pound also fell heavily against the yen starting last Friday. Stock market declines on Monday and Thursday increased risk aversion and prompted a reduction of carry trade, boosting the yen. From last week's high to this week's low, the pair moved almost 1,600 pips. The pair recovered slightly in the middle of the week and now seems to be ranging with support at 224.50. The Swiss franc was another currency getting a lift from this environment of reduced risk appetite. During the last 2 weeks, the pound-Swiss franc pair dropped heavily in the franc's favor. Losses in global stocks spurred traders to sell higher-yielding assets funded by the low-interest-bearing Swiss franc. The pair is down almost 1,200 pips in the last 2 weeks. By the end of the week, though the Australian and New Zealand dollars paired most of their losses linked to carry trade, the Canadian dollar did not. It lost 200 pips to the yen for the week, a reversal from a 170 pip move in the loonie's favor during the Friday session. The euro gained 360 pips, and the Aussie was up 200 pips against the Canadian dollar. As we reported yesterday, the US dollar is having a strong week, and a half against the Canadian dollar as investors worried about spillover to Canadian financial institutions from subprime mortgage woes in the U.S. We can see that even after a strong Friday for the Canadian dollar, thanks to higher oil and commodity prices, the greenback is still up 680 pips since setting a record low last Wednesday. The euro-US dollar pair ended the week close to where it started. It did not reach the record high set last week, but 3 successive lows that are higher than each other suggests that bulls are in control of this pair. As for their central bank policy indications, both economies saw elevated consumer inflation figures. It was a light day of fundamental releases. In the U.S. today, we saw data showing that industrial production unexpectedly dropped in October. Slowing sales prompted manufacturers to make fewer automobiles and appliances. Well, that's it for this week. Next week, look for Consumer Price Index from Canada, housing figures from the U.S., and the FOMC's meeting minutes. We'll see if the market jitters carry over and which way the ailing dollar will move. Thank you for joining us this week. For CMS Forex, I'm Mike Hetman. Have a great weekend.